Ladies and gentlemen, fellow traders, welcome to the live show. We're live trading, live everything, live me. Today I'm going to talk to you about entries. We're going to go over that in detail today, all about how to take your entries and how to get into a trade. And the main reason I'm doing that is because so many people struggle with that particular issue. How to get into a trade, where to take the trade, and where's the best entry point. So I'm just going to look at that today. And I'm going to go over it in detail once everybody arrives on the live show, and we'll go through it and have a bit of fun. But charts can't predict the market. And let's go and have a look at what the markets have been doing and where we are standing in the markets. But before I do that, I better move my photograph out the way, hadn't I? And don't forget, trading's risky. Most traders lose money. If you don't like losing money, you probably shouldn't be trading, perhaps doing something completely different. I don't know what. There are many other things that one can do. But trading is more fun and trading is more exciting. Where else can you go and seemingly turn $1,000 into $1 million, as they say? And that's the most insane thing that I've ever heard. But yeah, you know, it's a good point, because that person turned around and said, oh no, you just got to wait for the market to correct and for the market to go down and for the market to crash down. And then you can just take all the money you've got, whether it be $1,000 or $5,000, just throw it in there, and it will just grow into millions of dollars. Of course, why didn't I think of that? It would have been brilliant, wouldn't it? Would have been fantastic if I'd thought of that. What? Buy low, sell high, or something like that. The Bitcoin trade's not doing too bad. The Bitcoin trade has bounced off the trend support, is moving to the upside. It's broken the midterm sort of trend resistance, and it is moving along. So yeah, I've got my feeling that this might actually do what it is supposed to do, because you know, when it's in a scenario like this, it's supposed to come down to that level and then shoot back up again. And in all likelihood, that's probably what it should do. But as I say, charts can't predict the future. Neither can you, neither can I. So we never know where that might end up or where that might go. But hopefully it'll go in the right direction, of course. So that's Bitcoin. Bitcoin is doing okay. But on the flip side, our Brent crude oil is just milling around, really not doing much. It's just sitting here, getting squeezed in this level, and it's not breaking out the way we wanted it to, or the way we expected it to. But when these triangles start getting smaller and narrowing and getting smaller and smaller, there's a good chance that it's going to find its way out of here. I expect this one to resolve to the upside, not only because the price is low on Brent crude oil, and that, you know, but if you look at supermarket mentality, it is low, but also it was going up before it took this, and now the continuation hopefully will go to the upside. We'll see how that plays out, and if that plays out. The United States dollar, South African rand, I am long on that. I am sitting long on that, just not on this particular account, but on a real account, on my main account. This is a funded account, and the main account is a cash account. That obviously is more tricky, but that is going up, and it is going up nicely, and it is moving up from these lower levels. So that is fantastic. Hello, Elaine. Welcome. Good to see you on a Thursday. Happy Thursday. Lovely to see you guys on a Thursday. And it's always fun having you guys around. And I'm here to answer the questions for those who have them, but I'm going to give a little bit of training soon. Today, we're going to talk about entries and entry signals. It's important because a lot of people struggle with entry. A lot of people just can't take the trade. You know, their fingers hovering over it. Should I, shouldn't I? Should I take this trade, or should I not take this trade? Sometimes you just got to take the trade, whether there's lines on the chart or not, or if there's anything here or not. Perhaps you should just look at it and say, well, I think it's going to go that way, and just take the trade. Now look at the S&P 500. The S&P 500 hit the top. It's come down. It's gone back up, come down. It never actually quite hit the support, but it's bounced up anyway, and it's actually broken that trend resistance. So it's counter trading within the range, and it's going to the upside. So it certainly looks like the S&P 500 wants to go up, which is why this morning I looked at the DAX and said, this actually looks like a possible buy. Now, if you watch the members video, you'll see that I did mention that you have to wait for the green candle to confirm, and the green candle kind of hasn't confirmed. But we'll go into detail about that in a short while when I talk about entries and when to enter a trade and how to enter a trade. Where's the best place to enter a trade? and we're going to talk about that shortly. Hello, Momen. Welcome. Good to see you, man. But yeah, where should you enter it and how should you enter it? You don't just, oh, it's on the support now, I'll get in. Now, a lot of traders who will do that, and it doesn't matter. I mean, there were times when I did that many a time when I've made that old mistake, but it's not a mistake, because if you look at the DAX, for example, and you look back, look how long it's been in this range. Now, it's not to say that it's not going to break out of this range anytime soon, because there's a good possibility that it will. Why wouldn't it? It's, that's what it's about. How's it will? And you have to look at it and say, well, there's a good possibility that at some stage it will break out of that range. Why wouldn't it? It doesn't stay in a range forever, but it has been in this range for a long time. So the odds are on that it'll probably bounce off that support and head on to the upside. So for those of you that are risk averse and you want to take the chance, I mean, you might want to get in early, but that's also a bit of FOMO, that fear of missing out. So you want to get in early. FOMO can cost you money, because when you jump in too early, sometimes it's just that particular time when it decides to break out of that range and it costs you an absolute fortune. So sometimes it's better just to be patient and not to have the FOMO and just wait for the trade to take place. How's it, Coral? Good to see you again. But what I'm going to do, I am going to go into detail a little bit on entry points just now, because, it is something that has been an issue in the markets. But yeah, like I say, the DAX did look like it was going to bounce up here, and I think it still might. But you do need to just check if there's going to be any kind of signal for that. And we'll have a look at that shortly, and how that all works and why it all works and why it all doesn't work. Okay, so let's have a look at the gold. What's happening with the gold today? What's going down with the gold today? Has anybody bought gold? Hello, Fani. If you look at gold, gold has been milling along. It went straight up. We've had this long upward lamp pole formation, and lamp poles tend to fall over. Remember, I've told you that in the past. Lamp poles tend to just sort of fall over in the wind. You could call it a lamp pole formation, because it really has basically gone straight up. Then it's hit this double top at the top here, broke past that middle area. You know how that works for the double top, right? You get a double top or a pincer top or anything like that, and it forms an M. And at the peak of that M, if it breaks past that, then it's definitely short. It'll go the full length of the M, and it's actually broken way past that and gone all the way down to these levels at 39.50. Sat in that level for a while. We were waiting for it to break out either side. It broke up to the upside, which it did great, and then it's come back all the way back into this level again. Now it's broken out again, come back to retest. Probably a long trade. I think I did call it this week as a long trade, but it's been milling around, doing very little like most of the trades have this week, but it has broken to the upside. Bear in mind that most of the move on the S&P, NASDAQ, etc. has been a cause of NVIDIA. You'll remember on Tuesday I said to you they were waiting for the results on NVIDIA, and the results were expected to be poor. And I said to you, if the opposite happens, then most of the pricing has been baked in for a bad result, and what we got was a reasonably good result, reasonably good information coming out of NVIDIA. And that obviously is going to give you a situation where everybody decides they want to jump back in. And that's why you're seeing a bit of a bounce in the S&P 500, the NASDAQ, and many of the other indexes as well, because that bounce is as a result of most of this S&P 500 is very much pushed around by these tech stocks, in particular NVIDIA, and it pushed this all the way back up now. Now it's kind of relaxed off a bit. The hype is over. Everybody's figured out where they stand. But a lot of the push down was very much baking in the thought that NVIDIA was going to have some kind of terrible result, which it didn't. It actually had a reasonably good result. So that caused the S&P 500 to give you this bounce, and that bounce is now broken through a structure, and it's telling you that there's positive momentum to the upside. What that does tell me, though, is if this positive momentum holds and everything goes quiet, this will probably head off and go through to the 7,000 that we were looking for it to get earlier in the year. It just missed it recently at 6.9. So there's a good chance it's going to go and target that 7,000 now. And that's why I'm in the Bitcoin as well, because I just feel like there as well, there's been a lot of hype around the cryptos. There's been a lot of stories around the crypto. These are stories that I've been telling for the last, I don't know, since crypto began. Same old stories that it's fresh air, that it's going to eventually crash and all the rest of it. And it's being manipulated and all these conspiracy theories around crypto. But I just look at the price. I just look at what's tradable. I don't invest in crypto. I invest in shares. My share investment portfolio is just fine. It pays me dividends. It's a good portfolio. But Bitcoin, crypto, that type of thing, that for me is a leverage trade. But it's a good investment leverage trade because I'm looking at crypto in a different light. Very much supermarket mentality with crypto. Because crypto in general is being pushed up by a very excited crowd of traders or a very excited crowd of people, very much new traders in the market. And they are very, very positive about getting crypto to 200,000, maybe even 1 million. And with that in their minds, my thought is, well, ride the wave. So if this comes down to 90,000 like it did, why shouldn't I take an opportunity and buy it? Put my stop loss further down at the 80,000, 70,000. Might get down to that again, who knows? But if it doesn't, good chance it could bounce from here and go all the way back up again. And then you can make a decent profit out of the whole scenario. It's not like I'm investing in crypto. It's just like I'm riding the wave of all the Kryptonians. Call them Kryptonians. Okay, US dollar, Japanese yen, what the trade? Let's see. We've had a few good, there was another one, the CHF went well. And okay, the US dollar, Japanese yen, I love this because my opinion of the US dollar, Japanese yen, what I'm waiting for here is like, let it just reach this 159, 160. And I'm going short on this. And just look at the RSI on this, by the way. And, you know, I don't usually put it on, but for something like this, I think it's a great idea. Excuse the big microphone today. You just don't have to put up with it. Look how overbought that is. Now, tell me if you were an institutional trader that you wouldn't jump at the chance of selling that. So I'm just looking at this and thinking, I'm just waiting for the first opportunity I can get to sell this baby. This oak is going to be such a big sell. With that being so overbought, that's got to be a really good sell. So what I look at here, I know that the Japanese government does not like it if the yen's over 150. They really don't. So they're going to do everything in their power to push this down. And I got a feeling you're going to get a big run down at some stage here. So you just got to wait for that opportunity. And I think that opportunity will come soon, especially if it gets up here, 159, 160. What an excellent opportunity. You're definitely going to go short on the Japanese yen. This is a definite short when it gets to a certain point. But at the moment, it's extremely bullish, extremely good. And what a trade. Yes, like you say, Coral. Fantastic trade. I think it's really good. So it's we've been here 10, 15 minutes already. So I want to talk about entries. And I'm going to talk about entries in detail. Entries are really important in trading. And so many people struggle with entries in trading, struggle to take that trade. The one thing I'm going to tell you about entering a trade is just take the trade. Just take the trade and then worry about managing the trade after you've taken the trade. Whether you got it wrong, whether you got it right, really doesn't matter. The charts are 50-50. The charts aren't going to predict the future correctly. You're not going to predict the future correctly. Once you're in the trade, just manage the trade with the strategy that I always give you. The strategy is the most important part of the trade. So as long as you know the strategy, whether you get it wrong or right, doesn't really matter. All you got to do is take the trade. But the big thing is, you're looking at a trade and you're thinking, should I take this trade or shouldn't I take this trade? Now, there's a number of factors that come into play when you're thinking of taking a trade. One of the main factors being, for example, you're looking at this United States dollar, Japanese yen that we've just opened now, and we can clearly see that this is incredibly bullish. So anyone in their right mind who was taking a trade on this right now would say, well, I'm going to take a long trade on that because it's incredibly bullish. It's going to the upside. Clearly, it's moving to the upside. Now, my brain thinks differently. I look at this and think, well, I know from historical, because I've been around for a long time, that the Japanese government doesn't like it when this is over 150. So this is for me in supermarket mentality, very expensive. Not because I think it's very expensive, because I know that the people in the know don't like this. They think it's expensive and they want to push it down. So somewhere down the line, they're probably going to push this down. I look at the length of this run. This has been running for a long time. So I feel like I'm getting in at the end of one of these fancy schemes. You know, when they come to you with a Ponzi scheme and the first people to get in always make the money and you're always the last one to get in and then you lose everything. You're that guy that gets in last and then they just shut everything down and it all just collapses and you go, oh, why me? Now, that's the scenario I picture when I look at charts, you see, because I don't look at charts. I look at what's behind the charts. The human beings that are behind this have been buying it, and they bought it all the way up. So then I look at this and I think, this looks very overbought. It looks like it's been insanely overbought. So then, as I did earlier, I just put a little RSI on it just to have a look and see, what does the RSI tell me? And the relative strength index, it's the relative strength index. I know I hate abbreviations as well. Relative strength index is telling me this thing is insanely overbought. And I know that the institutional traders use the RSI a lot. So many of them will be thinking, ooh, it's time to sell. So you're going to probably see the Japanese yen start coming down. But now the problem is, how do I pick an entry point? How do I pick an entry point if this is going to come down? So if I'm an insanely cautious trader, I might wait for it to get below this trend line down here and maybe take the trade after the 155. But then FOMO will kick in. I'll say, well, I'm going to miss all this down to here. I'm going to miss so much of the trading. So I don't really want to do that. So you can just take another line. And I know this looks insane, but just draw a line up here. Get a red going through. You're breaking the structure and you can take a chance on maybe going down. It's not really strong, but it's a good start. Or you could look at, for example, this little guy here. There's a demand of money right at that level there. So normally it would come down, take that money and carry on up. If it breaks through that, you might be able to get an early entry there as well. So sort of like looking for sniper entries into trades like this, where you're not really quite sure where you can get the counter trade on such a strong overbought trade. But then you get the normal trades, the normal day-to-day stuff, like the German DAX that we called this morning. Now this one, of course, is a completely different ballgame. This one's been in a range for a really long time. So what is a range and how does a range actually work? So if you take a range, it bounces off the bottom, goes to the top, bounces off the bottom. Okay, this one didn't quite bounce off the bottom. It kind of got close, but didn't quite get there. Then it goes up, didn't quite get to the top. Then it goes down, goes up, and then it goes down. So what you've got here is this is now got to go somewhere. It's hit the bottom again. Now you could be the unlucky one again who's getting in last, and then this is just going to get out of the range and leave you behind. Or you could still be in with a chance here. And this should, in all likelihood, do exactly what it's been doing in the past, and then just bounce and go straight back up to the top. At least that's what everybody's hoping for. But how do I pick the entry out of this? How do I decide if this is true or not? Because it might not be true. It might be fake news. It might be like trying to entice me into taking this trade. And then the minute I take the trade, I'm the last one in, and it just goes crashing down into the pits of whatever. So no, we don't want that to happen. The only way to do that is make the chart a little bit fatter and look at these candles. I like the candles to be red and green because the red candles tell me when it's going down. The green candles tell me when it's going up. I don't like to take the red out of my trading because I trade both ways. And I'm very happy. I'm a 50-50 trader at best when it comes to trading up and down. I will take a long or a short at the flip of a coin. I don't mind one way or the other if I'm going short or if I'm going long. In fact, I sometimes prefer the short trades because on leverage trading, did you know on your cash accounts, you get paid for holding short trades rather than paying for the trades as much as when you're holding trades overnight. So when you're holding short trades, short trades are much cheaper than long trades on your account costs. So I like short trades. I prefer short trades at best, but if there's a long trade, you have to take it. So what I do is I wait and I see that this has now gone into the support. It's turned around At the moment, we've got red candles, so now's not the time to take the long trade. Clearly, it's a bad idea. So what you want to do is you want to wait for the opportunity to take the long trade. And the only way to do that, the best way to do that, is to wait for the long green candle to close, the 4-hour candle to close. And when that closes in a long green, preferably with a flathead top, not a long candle wick, then you've got pretty much some kind of confirmation that it's going to the upside. And if you're risk averse and you really don't, you don't want to take too much risk, you don't want to take chances, you're not one of those people who will just trade into the trade, because as I said to you, if you're looking for an entry point, just trade. But if you're not sure and you think, well, I want more confirmation than that, then what you can do is wait for it to come back and retest this level. That means it comes back down again, touches the level again, and goes up again. That we call the retest. And the retest is just saying to you, it's coming back, it's retesting, it's going out. Now, in this case, it's actually already retesting. It's breaking to the upside. It's coming back, it's retesting. In fact, it's even retesting this trend resistance, coming back, testing it, giving you a green candle to the upside, which is telling you this is a fine long trade. Now, I'm one of those traders who doesn't have the patience to wait for a retest. In fact, I find that in many occasions, the retest doesn't even happen. But if you're a risk-adverse trader, if you wait for a retest, generally your odds are much better when you take the trade if you wait for that retest before you take that trade. So that's a little bit about entering a trade, but my best information on entering a trade is just take the trade. Take the trade. When you see the trade on your system and the system is screaming at you, hey, Rob, take that trade, then just take it. Take the trade, manage the trade thereafter, because you've got the management skills to do that. You've got the strategy, you've got the business plan, you've put the business plan in place, and simply manage the trade and everything will come into place. And it'll be, once you start getting used to taking the trades, just taking the trades, then you'll find it that much easier with all your other trades as well in the future. It'll just sort of settle into your mind a little bit better. So what can you guys all tell me, and how's it been and how's it been going? And hopefully the sound isn't too bad today, because I have just put this big thing here for now. I'm having problems with the other mic at the moment. Right. Everybody else does it. Why can't I? Same thing. Yeah, but that Japanese yen trade, really interesting, Coral. Very interesting. Euro, Great British Pound. This was also an interesting trade. It's been going up for quite a while, but this one has really settled into this little corner here where it's hit resistance. It's really whacked into this resistance here. And it's kind of just coming out of that resistance and heading down and breaking through this trend support level. And if you get a nice red candle going down here, talking about entry points again, you've got to watch the resistance. You can't just, this was in a trend. So it's been in the trend, been in the trend, been in the trend, been in the trend. But now it's hit this resistance point. Now you've got to wonder, where is it going to go? Let's do that fancy thing again. See, it's gone up, down, it's gone up, it's come down, bounced up again, come down, bounced up. But now you've hit this resistance point. So now it either breaks to the upside and goes, or it comes down again. But at the moment, there's no space for it to move. So there's only one thing it can do. It can either break out to this side, or it can break out to that side. Which way is it going to break out? You and I both don't know. We can only sit here and presume it's going to go one way or the other. But the way it's been going in the past on this resistance, the amount of times it's hit, looks to me like it's probably going to go to the downside again and look for this bottom level here, which will be just fine for everybody at the end of the day. So yeah, that's your Euro Great British Pound level. It is quite a peaceful day today, very quiet. Lots of wind outside on my side. Very, very, very windy. But so for me, going out today is a really bad idea unless I wanted to go windsurfing, which wouldn't be for me anymore. getting too old for that. Stomach muscles won't take it. So what trades have you guys got on the go at the moment? What are your thoughts on the trading? We've talked about entry points, and we will talk about exit points as well, because exiting a trade is kind of almost as important as entering a trade, if you think about it. Truly is. I just want to see on this United States dollar, South African rand, how are we looking? And that doesn't look too bad, actually. It looks like it really does look like it's heading in the right direction and doing what we need it to for a change. You know, it broke structure, headed on up, and now the structure's moved. So we'll just draw this in here. It does look rather nice. I think that I'm just going to put it in there for now. And then you can actually see it. There's the little railway line. It's going nicely up. So it's trending to the upside. It broke structure over here. It's moving structure to the upside, and it's just bouncing along up here. I'm hoping it'll bounce all the way up to 1750. That'll be just fine. That'll be just fantastic at the end of the day. That'll be great. That'll be a good trade. So that trade's looking decent at least. Then I saw some stats the other day that historically gold goes down about 2% between November and December. I love historical trades. I love historical trades. I love sell in May and go away. I love the Christmas rally, all these different things in the market. But, you know, there's a reason why these things happen. And it's normally got to do with the flow of the money or something that happens in the background that causes all these movements, which is why we always get the sell in May and go away. We get the June, July rallies. We get the Christmas rallies, and in January things tend to go down. If you start looking at historically, you pick up a very large percentage of the years these things happen. Now, when it comes to major investments or people that are moving money big time over a longer period, it might be important. But if you're trading on a quick note, it is kind of difficult to run with. But historically on gold, if I look at the history of gold, it's very difficult to call, for example, the stats where historically gold goes down between November and December. Because historically gold has been a poor performer, a lagger of the market. And it really hasn't been out there in the front doing its thing. It's always lagged behind. And it's never really given that move that one would be like, oh, there's gold, let's go with gold. So when I look at gold, it's almost like, should I even look at the stat? But the reason gold would do that is the same reason it's doing it right now. And that is, here's everybody getting into gold because they're really not sure what's going to happen with the S&P 500. And they're really not sure with the tariffs and all the news going on in the market and whatnot. So gold becomes a safe haven trade. So everybody piles into gold. And when I say everybody, I'm talking about institutional money here. They pile because they're dealing, you must remember the institutions are not dealing with just money out of their pocket. They're dealing with people's money, other people's money. People invest money with these people, and they expect that money to be invested, and they expect that money to make a profit. Not to make a loss, to make a profit. End of the year, they want to know that they've made 15% on their portfolio or whatever the case. So they have to have 95% of their money invested somewhere. They can't hold cash. It's worthless for them to hold cash because then the client might as well hold cash. So now they have to invest that money. So they've got it in indexes, they've got it in shares, they've got it in bonds, they've got it in commodities, they've got it in all over the place, right? But what they start doing is they start shifting the portfolio because the portfolio is overbalanced on indexes, for example, and indexes are looking a little bit iffy. So then what they do is they rebalance the portfolio and they push the money over to the commodities. And then they also start looking at the dollars week. So there's a possibility of a commodity super cycle. So they think the commodities are going to go up and it's going to make them a lot of money. They put some rumors out into the market so that you get involved and put your money in there so that they can take it off you when they turn the market short, which they did. They certainly did. So what happens then is this is where it turns around and starts going short, because the indexes start doing well, because the indexes start picking up, because the indexes start, doing well. So they start rebalancing again and moving the money back into the shares, moving the money back into the indexes. And then they get a bit of bad news. They're thinking maybe Nvidia is going to do bad or something's going to happen in the market. So this starts to happen. They start rebalancing back into the commodities, and now the indexes look like they're doing well. So it starts coming down again. I do have a feeling, and if I look at this technically, that gold is going to go up again. I'm of the opinion that if this works out, this is a retest, that the green will give us a long trade, and it'll give us the target of 4,500. But if that plays out, if the indexes do really well now, and we start heading for the 7,000 on the S&P, then there's a good chance that gold will probably correct from here rather than go up. And if it corrects, probably come back down into the 3,000s. So yeah, there is that possibility with gold that it could come down to the downside. Okay, so historically analysis always purposely lowball earnings. I'm waiting for an alert on US dollar CAD to hit 140.73, and then I'm long. Okay, Carl, I'll have a look at that. You say US dollar CAD. I was looking at that this morning. Let me just have a look here. US dollar, Canadian dollar. And it is one of my favorites to trade. I do like trading it. And there you go. Okay, fantastic stuff. There's the level that it broke through. It broke through this level quite cleanly. Came back, retested it, broke out again, came back in, it's breaking out again. So it's a very, very important level that it's breaking through. And okay, so you're waiting for the 147. Wait for it to break past that prior high. It's a good level to wait for. It is a good level to wait for. There's absolutely nothing wrong with that. But as far as structure goes, it's already breaking to the upside. It's already moving to the upside. It's actually giving quite a good signal that it wants to go up. The only thing with the Canadian dollar, it really doesn't go much further than this usually. And there's the double top that broke that, came all the way down. I was looking at this morning. I was thinking, wouldn't that be great for a trade? Right, so I wasn't looking at it on this account. I was looking at it on another account, so I just want to put my stuff in place here. So there's the bottom. Bottom's quite far down, 137.21, way down there. Suppose you could bring the bottom up to here as well. I don't need it to be all the way down there. Okay. There's the range. There's the double top up there. There's a level here. Yeah, I'd wait for it to break through that level. That'll give you quite a lot of confirmation. I think a nice green candle out of here will give you a lot of confirmation, so that you say it's 140.73, which is just above there. Yeah, I guess that's the level, and it's just above that there. I see what you're looking at. Just above that level there. So you're just waiting for it to break through there, which is great. Yeah, that's actually pretty straightforward. That'll break out to the upside and off she'll go. On the flip side of that, as you get a red candle off here, it turns around, goes down, and comes all the way back down to this level here. So yeah, got to watch out for that. It is very much at a high level. And but yeah, I see that on US dollar, Canadian dollar. That looks like if it breaks out, it breaks out. It looks pretty decent. Looks like it wants to go there. Let me take all these lines out of here so that nobody gets too confused by the whole movement on the DAX. Yeah, DAX movement. Okay. Yeah, but like I say, I do like these historical chirps in the market, like what happened in the past. It's the same as a chart. You look at a chart, what happened in the past, and in all likelihood happen again in the future. And that's why they have these sayings in the market that every year at this time of the year, this happens or that happens or whatever the case. You keep an eye out for that. I do like it. But often, like I said to you earlier, have you ever felt like you're that last person getting in You know, every year, for example, you have the Christmas rally and you think, well, if I just buy every Christmas, I'll be in with a rally. Trouble is, you'll be that 1 year that you'll do it and then it'll go the other way. Because every few years, I think the success rate on that is about 7 out of 10. I stand to be corrected, but over the years, I've noticed that the reason those feelings come out is because most years that's what happens. But you always get that odd year where it doesn't happen, or it just goes flat, or whatever the case. The sell in May and go away was a big one for me for many years. Recently, it hasn't been that bad. It is interesting though, these things in the market, you know, that the repetitiveness of the market. But the repetitiveness of the market, you know, like Nick says, historical analysis, purposely lowball earnings. It's also to do with the way the money flows and the way things are done. And there's certain times of the year when things happen in the market, and that clearly affects the money flow, and it affects which way the money goes. And that will pull the markets up and down because it affects the results of the market, the CPI, the inflation, all that sort of stuff, the actual dollar, everything. It all gets affected by these things. And it normally happens at specific times of the year, which is why that occurs. You know, I remember I used to work for a company, I won't name names, that would specifically, I think it was either August or October, I can't specifically remember, I was like 21 years old or 22 years old or something. I was very young. And it was one of those companies where the CEO would specifically wait for a strike at that time of the year because he had enough stock in the yards, and he didn't really want to make more stock. So his thought was, well, if these guys strike, then I won't negotiate for about 6 weeks. I don't have to pay them salaries. They can all go home, and or they can stand outside and pick it and whatnot. I've got enough stock in the yards. And then after about 6 weeks, I'll negotiate with them and I'll give them their 10% pay rise because I've saved that on the salaries anyway for the 6 weeks that they've been off that I didn't have to pay. Incredible how these guys sometimes think. And it became a seasonal thing. So you knew every year at about that time this company would have a strike. And I wouldn't be surprised if they had people in the unions that incited the strike for them so that they would get that to work for them. It was quite incredible when I heard how that works. Very interesting. Luckily, none of my companies ever had strikes. Only had a few people working for us. Yeah, that would have been insane. But yeah, no, that when I heard that, I was actually quite shocked, to say the least. So here's the German DAX. Is anybody long on the German DAX? Anybody short on the German DAX? Anybody thinking of any trades on this? Or has anybody got any ideas for trades on this? I did have one guy ask me today about the 1 or 2% rule, and say, oh, well, I've only got $1,000. How am I going to make that work with it? Like if I have 2% risk, then I'm only trading $20. You have to get the mindset of this, and that is, doesn't matter how much capital you've got. What matters is what you're going to do with that capital. And what you want to do with that capital is grow the capital over time, or otherwise you're going to lose it. Now, the mistake, or the mentality mistake that everyone makes, or the psychological mistake that everyone makes when they get into the stock market or into the Forex market or crypto market or whatever market you're getting into, is you expect that you're going to be able to take $1,000 and make 1,000% on it. And unfortunately, there isn't a business in the world where you can do that. It doesn't work like that. And I know they've told you it works like that, but it doesn't. So effectively, if you have $1,000 and you're risking 2%, you're going to work with $20 and you're going to grow that over time. It's going to take you a while to grow it to $2,000. Whereas if you had $10,000, you'll be growing it to $20,000. And if you had $100,000, you'll be growing it to $200,000. Suddenly the size of the capital makes a difference to the amount of money that you're making, or the amount of money that you're growing your portfolio into. Now, I'm talking about doubling your money here annually. Where? In what business? In what investment can you take your money anywhere in the world and double it in 12 months? I don't think there is one. I don't think there is any business like that apart from casinos. So I say to you, even that is ambitious, very ambitious, expecting to double your money over a period of 12 months. You can expect a good return if you do well of 25, 30, 40%. It's not bad. Doubling your money is really ambitious, especially if you're new to trading. And the idea behind it is a form of insanity, because I'm still waiting for someone to tell me where I can take my money in the world and invest it somewhere, put it somewhere, and they can guarantee me it's going to be doubled within 12 months. My money's just going to double. It's going to be just double. Not even, I'm not asking for 1,000%. I'm not asking you to turn $1,000 into $1 million. I'm asking you to double my money in 12 months. Can you do that? Probably not. Most of you can't. And, you know, a lot of you think you're going to get into the markets and do that. And that's the difficulty. And that's why I say capital is so important. I see a lot of people out there boasting, I made so much today, I made 70,000 today, I made 150,000 today, I made 200,000 today. To do that, you've got to have a huge capital amount behind you to risk that leverage trading or to take that risk. If you only had $1,000, you won't make $70,000 today, I guarantee it. You'll be lucky if you make $20 today. Safani's taken the long on the DAX. So yeah, I know I've called it, but it might be a bit long, a bit early for the long on the DAX, but that's the area I'm calling on the DAX at the moment if nothing goes pear-shaped, because as you know, it could go pear-shaped. But yeah, I'm waiting for the green candle to give us a signal, a strong closed green candle to the upside without these nasty tails on them, or wicks, as people like to call them. Perhaps even wait for it to break past that red line there and go to the upside, break past the prior highs, giving you a clear signal to the upside. But yeah, otherwise, you know, if you're risk adverse and you're ready to trade, I mean, really, you can see that this is a level that this likes to turn around at and go up. But that depends if you're the, you know the musical chairs and you're the last man standing and you're not getting a chair and everything's going to turn around today. Well, that depends on that. That really does depend on that, because if this all goes pear-shaped now, then, well, there you go. So just manage your risk. The last few weekends, I've been getting out of my trades because I've been a little bit concerned, because Friday afternoons, these markets have been showing signs of weakness on a Friday afternoon in all the countries. So in other words, you know, at the end of the day, on Friday, these things have been finishing on a weaker cycle, and that normally signals a bit of a red flag for me that there's a possibility of something going wrong close on the weekend somewhere down the line. But if something goes wrong, normally I'll pick it up a lot earlier than that. Normally I'll know, because there'll be something going on during the day or some news or whatever the case. And yeah, that. But yeah, like I say, last few weekends I've been a little bit cautious on the trades. So I wonder where this Japanese yen's going to end. It's quite an insane move, to be fair. So anyway, the difference between traders who failed and the traders who've made it are the traders who've made it didn't stop. I know that sounds cliche, but it's a fact. The traders who made it didn't stop. Now, how does that work? Why did the traders who made it, why are they the ones you say didn't stop? Well, because the more you do it, the more you learn. It's like anything you do in life. The more you do it, the more you learn, the better you get at it. And a lot of people expect to get into trading today and make money tomorrow or next week. suddenly I'm going to get into trading. I'm going to get in there with no capital whatsoever, and I'm just going to make a fortune. And that's not going to happen. It's going to take a while to learn how to trade, or to get the feeling for trading, or to get the feeling for how these things move and how the markets move and how the markets work. So when it comes to that, the ones who are successful, the traders who are successful, the traders that are still in the game, are traders that stuck it out, traders that managed their risk and were more cautious about how they traded. They weren't just like willy-nilly get in there and just take trades and go mad and see what happens. No, they took trades the right way, but they stayed in the game. And staying in the game is what it's all about. And the longer you can stay in the game, the more you can learn about it, the better you can become at it, and eventually you'll break through. And those are your successful traders, the traders that have been in the game, that stayed in the game, and understood that it takes time to make a profit. You don't just, oh, I'm making a profit today and I'm out there and I'm making a fortune, I'm the dude. It takes time. It takes a long time. Bounced again from the resistance at 23,000. Fani, I just want to see what you're on there. Oh yes, no, that's a support, Fani. I'm not a big one for touting terminology, but just so you know, like the support's at the bottom, the resistance is at the top. Just in case one of the other traders give you a hard time, because they will. They normally do. They're so into their terminology and their shortcuts and names and things. But just so that you know. So there's your support, and then it bounces out of your support, breaks through your trend resistance, and starts heading to the upside. I would like to see it break past that red line there at 23.5. That would be nice, because that would give you a clear confirmation that she's going the other way. We do have some confirmation at the moment, but a nice clear one would be good. But it looks like it's come back to retest here, and it might head on to the upside. But there's your main support down there. Yep, turn that down there at the 23,000 level, and it's turned around and picked that up again. And look how far back it goes. It really does go quite far back. So it is quite an important level. It's a very, very important level, I must say. Yeah, it's like I say, Fani, like it's a feeling you get, or a gut feeling that you get in the markets sometimes, that something's about to change. And it's because your subconscious has seen it before more than anything else. And that's what comes with experience. You don't become a clever trader. You don't become brighter than what you were when you started. You just seen more, done more, and sold more t-shirts, and then you get the idea. You know, okay, look at that. You know, I've seen that before. That's happened before. That's what charting is all about anyway. I mean, if you look at charts, it's all about what happened in the past. You're looking at about, oh, look, that's what it always does. So if it always does that, surely it's going to do it again. The only time it's not going to do it again is if, like I said earlier, you're that last person on the musical chairs and there's no chair left for you to jump into. Yeah, that's going to happen from time to time. And that's why we have losing trades. That's why trading is 50-50. You know, the whole point here is, for example, now, chap turns around and he says that to that guy with $1,000 who's saying, but how am I going to make money? So chap turns around to him and says, all right, take your $1,000 and throw it in at the bottom of the market. Brilliant. And then, like, where's the bottom of the market? Well, if I was going to tell you to do it now, this would be the time. But that's still 50-50, because I'd be saying to you, look at this. This is the area you want to be throwing the money at, because it's at the bottom. But it's still 50-50, because you might still be the last man standing, and it might just crash for whatever reason. There's no guarantees in the market. You can't call the bottom. You can't call the area where that's the place to throw the money at. Buy low, sell high. How do you know when it's completely low? You don't. You just don't. But if I was going to take the chance, this would be the point where I would look at taking the chance, because now that's the perfect scenario. It's come all the way down to the support, come all the way down to the bottom. It's turning around, and it's looking like it wants to go the other way. So that's the point you're looking for. That's the little point that you've been searching for, that moment in time when you've got an opportunity to get in. The opportunity will do one of two things for you. It'll make you an absolute fortune and go long, or it'll lose you an absolute, minuscule amount of 1% risk, or if you're risking 2%. That's all it will cost you. It'll cost you that risk. But is it worth taking the trade? And in Fani's case, yeah, sure is. Sure is. As Nick says, you get more patient with trade setups with experience. And totally agree with you, Nick. That's the big thing here. Patience. Wow. So many traders are not patient. Patience is such a big thing in trading. And waiting for trades to come to you. For example, this trade is coming to you. You're not chasing it. It's coming to you and it's saying, I'm here. I'm ready to be traded. Trade me. Look, I'm in the right spot. That's what this trade is telling you. This is what this trade is actually saying to you right now. It's telling you to trade me. But it does, you just still want to have a bit of confirmation before you take the trade. But like I say, you're patient, you wait for the trade comes to you, and then you go. They call it sit on your hands and wait, stop, just wait. And it's also, it relates very strongly to FOMO, fear of missing out. It relates very strongly to that because you're looking at the trade thinking, got to take that trade now, I've got to take that trade now. That's FOMO. Because you're afraid that if you don't take the trade, you're going to miss out on the trade. So you don't want to miss out on the trade. You want to take the trade, obviously. Because if you take the trade, then you're in. But then if it goes wrong, you're going to be disappointed in yourself. And that FOMO is going to cost you money. If you're patient and you wait for the trades to come to you and you're patient with your trades once you're in them, you're going to have better setups and you're going to have better results with your trading at the end of the day. Just having a look at the Bitcoin trade to see if it's still in one piece. I just moved that by mistake. I don't even know where it was. But it's okay. All right, so that is now in a profit, not much of a profit. It is moving along. You see, this is where patience, this works on your patience. If you look at this, I mean, you're looking at this and it's going nowhere. And eventually, you're paying for this trade on a daily basis on your leverage and it's costing you money and it's just sitting and it's going nowhere. And you click out of it and you say, I'm done with that. I can't hold on to this forever. It's just costing me money. It's in a profit, but it's wasting my time. So you click out of it. And the minute you click out of it, it does what you expected it to do in the first place, and it goes flying in the right direction. So that's got a lot to do with patience as well. You have to be patient. You have to sit and wait. This is why a lot of traders end up dropping down to those 5-minute charts and 1-minute charts and 1-second charts, tick charts as we call them. That's insanity by itself. You see, you get bored because trading's boring. It's lonely and it's boring. Okay, so you got these two things that are going against you. And for those who don't have something else to keep them busy and they're just looking at charts, it's going to be very difficult to sit and look at 4-hour charts or day charts all day long because they don't do anything. So you're going to start getting itchy feet and then you're going to start dropping down to those 5-minute charts. You start trading down there and then you start losing your underpants. It's an issue with all traders. And, one of the other issues with traders is, people don't believe in what you're doing in the first place. So when your friends or people around you ask you what you do and you tell them you're a trader, some of them will actually say to you, get a real job. But those people are not living the lifestyle. They go to work every day. They have a hard time of it. They get up early in the morning. They get home late at night. Not to say you don't, but you're going to be way ahead of them somewhere down the line. So, but they don't believe in what you're doing, and that's something you're going to have to understand as well. If you're new to trading, you tell people what you do, they'll be like, "What?" Yeah, I know. A lot of people will think you're mad, and then everybody will have a comment about the stock market and how it's put together and how it's put there to rip you off. And man, I've heard all the stories. I've heard all the stories through my time. Some of them are interesting at best. I've had some real geniuses sit down and explain how terrible this is and what it's all about and what have you. And I sat there listening to them thinking, I've been doing this for such a long time. And you guys don't even trade, and you're telling me all about this stuff. There are obviously rumors that they've heard or something from other people. Yeah. Obviously, if people think they will be rich overnight, they didn't do enough doing research and living in their dreams. Nick, that's the most valuable lesson I've learned from here. Calm down, yeah. It's very funny. I can't cross $1 figure always when I'm close to it. Then the market shows me who is the boss. The market will always show you who's boss. That's what the market does. The market will always show you who's boss. Don't tell people you're a trader. They will want tips to double their money in a year. Now, besides that, yeah, I actually forgot to mention that. When people do know you're a trader, whenever you go out for dinner or go to a place or go to a function or whatever the case, they just want to start talking to you about their investments and their stuff. And man, you just want to talk about, for example, I like Formula One and motor cars and football and stuff like that. Let's talk about that. But no, we want to know what's going to happen with whatever tomorrow or whatever the case. I tell you what, but generally people find out what you do, and they want it. They want those answers. Obviously, they do come and ask you those questions, and yeah, it makes for an interesting situation. So if we buy this, then where would we put the stop loss? So I don't know, Fani, you say stop loss 23,000, eh? Is that what I said this morning? I think so. I think I said 23,000. Which is, yeah, okay, if it goes there, it's gone. All right. So that looks like on this account, half a lot. Yeah, okay, that'll be fine. Take profit, 24.5. Yeah, sounds fair. 24.5. Okay, so I'm going to buy the DAX and just leave it and see. Okay. On this account. There you go. Now, let me go and buy it on my other account. Hang on. Sorry, guys. You won't see me doing that because it won't come up on the screen, but that doesn't matter. A jackhammer operator. What's it like being a jackhammer operator? Is it interesting? Where is the DAX? There you are. DAX. Okay. This one I'm gonna risk $1,000. So stop loss 23,000. I'm not even looking at the chart on this one. 23,000. This one, I need a couple of more lots here. I don't want to risk $5,000. Are you insane? Goodness me. Jeez. Tell you what. Sometimes I wonder. Oh, goodness. Why is it giving me such a hard time? Okay. And then take profit. 24.5. That looks fine. I'll just buy it at that. Boom. There we go. Germany 40 in. Sorry, I was just buying on my other account there, guys. So that's also in on a trade. Because that looks like something I want to earn. If it goes against me, well, so be it, eh? So this one, what we're looking at is a nice little long position. So we've got a long position with a target up there, our stop loss down there. So you can clearly see with that the risk to reward is pretty good. The reward's up there, risk is there. First target will be at about the 24,000 level, and then I'll try and make the other 500 points. And you know how we take the profits. We just move the stop loss up and we follow the trade up. That's how we make the profit. So we don't just click out of it. Just leave it and try and, we actually try and trail the stop up. Okay. Yeah, but if you drive a 2007 pickup truck, then everybody wants you to help them move their stuff. Pick up their stuff. Oh, no. Yeah, it's interesting. Very interesting. But yeah, a lot of people know what I do. A lot of people have dealt with me in the past, and they're old friends and stuff. So, but yeah, like I say, you go places and then everybody wants to know, about the markets and what's going on and what's going to happen with their investment, or where should they invest their money if they retire or do this, that, or the other. And I'm like, I'm not the guy to ask, man. I've got my investments and I've got a trade going here and there, and I'm a trader and what have you, and I can show you how to trade and what have you. I've had many of friends sit at the desk with me and learn how to trade. And I've had WhatsApp groups where we talk to each other on a regular basis often. And it was fun. It was great. But the trouble is, some of those guys didn't make it or lost a lot of money, and it went bad for them. It wasn't my fault. I mean, they went and did their own thing. But yeah, now they see trading as a bad idea and a bad thing and all the rest of it because they messed up. But yeah, that's how it goes. That's how it goes in life. You'll have a lot of friends like that, and you'll see them go down. It's terrible to see the oaks go down as well. You've got to stay in the game. It's really important not to get over anxious, and it's better to stay in the game. Remain calm, as somebody said here now. I learned to remain calm. Calm down, take it easy, slow down, take the trades, position yourself, relax, let it happen. Don't worry about it too much. You just saw me take a DAX trade now. I moved on to my main account and took the DAX trade there as well. And I'm good with it. It's fine. We'll see what happens. I've been doing this too long. You don't have to stress about it, worry. I know they go up and down. Like, this is what I show you guys on a regular basis is, out of all the trades you take, you're going to take some loss. You're going to take some win. Deal with it. Deal with it. You can't win all your trades. It's just not humanly possible. You can't double your money in 12 months. It's just not a thing. I have done it once or twice, but okay. It's not something that you profess to tell people you can do, because it's not generally normal, right? Normally you can make 20, 30, 40% on your money. To double your money, that's a tricky game. That's not easy. And for those guys who say they can just increase it by 1,000% is, wow. I'd actually love to see that for real. And there is one particular fancy trader running around out there trying to profess that he can do this, but every time he gets to trade number 6, it fails anyway. So you're back to square one. So it's never actually been done by the looks of things. I don't think anyone's actually got to the full 10 trades and succeeded. So yeah, it's a basis of take $1,000, put it in, leverage it full, double it up, then take the full the win, double it up, take the full win on the third trade, double it up, so on and so on. But you've got to win every trade for 10 trades for that to work. And you've got to go full leverage, full ball every single time. And then eventually you'll have turned $1,000 into $1 million, I think it is. Which is, yeah, that sounds great. Sounds great. It's a wonderful theory. I mean, in theory, of course it's possible. Anything's mathematically possible. The reality of it is, though, it doesn't work. You see, because when you're scalping, you're taking small ones, you can win 10 trades in a row. But when you're putting proper targets in place, like this one, for example, here's a target of the resistance level. I'm not going to use this is what, $630 here. So you target that and you risk 230. So there's your trade. Okay. Now every trade needs to have a target like that. Every trade needs to have its target. And if it doesn't, then that 10 trade system won't work. It needs to have the full target for it to work. So what generally happens is, you've seen yourself that 50% of these trades fail. So how are you going to win 10 trades in a row targeting the full amount? You're not. You're just not. You can't. It's not possible. It's a great idea, but it's not possible. Nick makes himself very hard to get hold of. I'm laughing, but so do I. Anyway. Yeah, no. I can count my real friends on my hand, to be fair, after all these years. I've had so many friends, social, loads. I could go to parties and go mad, but real friends, count them on my hand. Yeah. Gone through a lot of years. Let's check how this one's doing. Okay, still there. This one's also just milling around, not really giving me what I want it to give me. It is in profit, but goodness me, it just needs to go somewhere now. And every single time the US dollar South African rand has cost me money, I've just got married to that trade. That's something you have to be careful of, and it's something that I've kind of done on a number of occasions in my career. Still do it. As you can see, I still do it. I get married to certain things like United States dollar, South African rand, or Aussie or German DAX, and I get zoned in on those products. I get married to them, and I start. I just keep on trading them, because I'm convinced. I convinced myself for some other odd reason that that's the one to trade. You've got to be careful of that. It does catch you out. It's caught me out on millions of occasions, to be fair. It looks like gold is now starting to bounce up. I did mention to you guys that it looks like it wants to bounce up. I think with gold, what we should do, because I see it is going up now, not down, is just check if it breaks through there. And I think if it breaks through that level, breaks past that level, then you've got the long trade to the upside. Looks pretty fair. So that one as well, just waiting for a decent level for it to break up, and then you can get the trade on that. That looks pretty good. What do you guys think, eh? Gold. I know that you said that gold generally goes down between November and December, and you're right. But, maybe this year will be different. We'll see, but let's see what happens. Yeah. Depends how fortunate you are in life as to what you'll have and what you won't have. But I asked the question the other day. I had that little survey, why did you get into trading? Is it because you love trading? Did you get into trading for the freedom or for the money? Oddly enough, most people got into it for the freedom. So bear in mind, if you got into it for the freedom and to get away from having to work for someone or whatever, and you just want the freedom to be able to do your own thing and just have enough, to survive and enjoy life and what have you, because that's what you'll have, then just don't go get yourself caught up in 5-minute charts and 1-minute charts. because that will take your freedom away. I know there's a lot of guys out there that are promoting this, going to work for 2 hours, so go in at the open, trade for 2 hours, make a couple $100 and go down the beach. Now, there's a lot of guys out there promoting this, and it doesn't work, because what happens is you go in at opening time, you trade for 2 hours, and instead of winning $200 or $300, you end up losing $200 or $300 or more. And then the psychology kicks in and you start trying to get it back, and you end up sitting there 14 hours instead of 2 hours. So you're just stuck at the computer all day fighting, trying to get the money back. Most people will do that. I don't care what you say, most people will do that. There's very few that won't. Very few that will walk away $600 down after 2 hours. You went there to make $200 or $300, and you're $600 down after 2 hours. Now I'm just going to pack my bags and I'm going to go down the beach. I mean, if you did do that and you went down the beach, most of you will be sitting there going, oh, I've lost $600. So most of you will sit there trying to get your money back and make it worse, make the situation worse. So if you want the freedom, stick to the 4-hour or the day charts. Keep your trading slow. Position your trades. Go in the morning, take your positions. Have a look at where you've won your positions. Go down the beach, take your phone with you, because you're going to want to check your trades. I know you. You will. Everybody does. Even I do. So you go down where, if it's the beach you go to, maybe you go to the restaurants, maybe you go shopping. I don't know. Do your thing. You know, maybe you're just going to lunches, whatever. Do that thing that you do and enjoy your life. Or if you're doing something else, like I keep myself busy making these YouTube videos for you guys now. Previously, I would sometimes just play games or so, whatever, just to keep myself busy. But because this is pretty boring now, but you want the freedom to do your own thing, to not have a boss, to be able to do all the things that you want to do in life, right? So I've been doing this since I was 27 years old. So believe me, I've enjoyed it and it's been good to me. And I've had a couple of businesses in between, but then I was the boss, so it was okay. But don't try going down to lower time frames. That will trap you. Stay on these higher time frames, position your trades in the morning and leave the trades in. And then when you do go down to the beach, the shops, whatever the case, during the day, you can just check back in with your trades on your app on your phone. Okay, everything's going okay, hunky-dory, fine, I'll just carry on enjoying myself. Come back sometime in the day, during the day, on your PC, check out your trades, check what's happening, see where you are and what you need to refocus on or readjust or whatever. Start planning for tomorrow. Start looking at where the markets are going, what have you. Don't trap yourself into sitting watching these charts all day long. You don't have to do that. It's not necessary. If you did this to get some freedom, then get some freedom. Don't get yourself all trapped in your office, stuck there forever, never see the outside. You're going to miss out on a lot. Go and enjoy your life. You know, I'm actually starting to consider getting myself into the camping game as well. I said I would never do that. I always stay in a lodge or a hotel or whatever when I go away. But I'm actually starting to think, well, maybe I should just get myself a van, hook it up, and head out into the mountains and enjoy life a bit, you know? So, yeah, guys, don't get caught up, stuck behind computers. I did it for a while. In amongst those years, I actually found myself stuck behind a computer screen trading, and you don't want to do that. So watch out for that. So Lunchalot, how's it, man? Hey, good to see you. Been a while. You bought the gold. Oh, I bought the DAX. You bought the gold. The gold is a good buy. It looks like a good buy. I'm just waiting for it to break to the upside here, and it might actually be a good buy. See there, it's actually just, it just needs to break through there, and it'll give me a good signal for a buy, I think. I don't know. Depends. We'll see. Jackhammer operator training for side comics. Come on, keep those stomachs over the handle. Let the fat do the work. I think the jackhammer would operate me, to be fair. This is why I don't windsurf at my age, because the stomach muscles have to be insane. to windsurf, and I don't do that. So yeah, so that jackhammer I think would bounce me around. I'd be like all shook up, as they say. Can't imagine me behind a jackhammer. No, no, definitely not. Not for me. That's not going to work so well. So Lunchalot's been in a DAX buy for a few days. Okay, that's a good one. The reason I went in now is because it's just hit that support level so hard, and I'm sitting waiting for it to do something, and so I'm just now suddenly starting doing something. Like I said, I was going to wait for this candle to close. I was going to wait for it to break above this level, and I just thought, you know what? Let's just go for it. It's at the support. It's either going to go up or down. Put the stop loss in place and see what happens. And I've taken the risk on the main account as well, so we'll see. But I'm interested in gold as well. I'm also as Japanese yen. I'm hoping that we get a good run on that. That might be worth something. Eventually, this might be worth something. It's gone up so hard. I really am waiting for this to say, come down and start heading to the downside, because that'll be a good short. You can wait for it to come through this bottom line here, but I'm thinking we might be able to get it a bit earlier than that. We'll see what happens with it though. So last live show was on Tuesday, so it's not that long ago, SLA. Yeah, but that was on Tuesday, eh? We had the last live show. Or were you last here last Thursday? That could be even worse. But look at that. That's okay. So you would have probably got in a bit early. It's probably run you down a bit and taken you up. But yeah, it's in the support level, so I don't see you really sitting in drawdown now. I think it's going to go up now. It does look like it wants to go up now, so it looks pretty decent. We'll see how that goes. And then we've got to get the Bitcoin to go as well. I'm just going to actually reload this thing because it's lagging. I sometimes wonder about the servers on these things and what goes on in the background, because so often these things start lagging. But yeah, the brokers will be what they be, but it could be my internet as well, so hopefully not, because I hope you guys can, well, it says excellent connection, so I don't see a problem with that, because it is very windy here. So normally when there's a lot of wind, we have a few problems. I see it's taking a long time to load, but if it fails, I'll just go onto my other platform and we can carry on from there. It's not a problem. Okay, there we go. Some action. Haha. What is going on? All right. We shall see. What's going on with the Brent crude oil here? Does appear to be a little bit. This thing is going to drive me insane, really. Just never seems to go anywhere, does it? Would be nice if it would just go up for a change, do something decent. But yeah, let's have a look at the gold. It's working better now. Stop lagging a bit. Okay. I find that if I leave on certain ones, if I just leave the charts running all day, they start lagging. It's crazy. Don't know what that is. I don't know if it's on my side or if it's on their side or what's the story, because my other ones don't do it. My MT5 doesn't do it. Definitely doesn't do it. Dum. You guys have got snow. Wow. Snow. Christmas time. Yeah, of course. We have summer at this time of the year. This is our hottest time of the year. Well, actually, February is the hottest time for us down in Cape Town. But December's quite warm. Apart from the fact New Year's Eve is always freezing. Wow, I don't know why. Always windy and cold. You go down the beach to watch the fireworks and that, and it's windy and it's cold, and they cancel the fire. No, geez, it's insane. So every year talking about cycles in the stock market, we have that cycle here, you know. You're in summer, you think everything's fine. January the 1st comes along and it's cold. Although last year was nice. Last year was a good one. The kicker, hi Rob, freezing in Scotland. We have our first snow now. Yeah, that's why I left Scotland when I was a kid. Well, I didn't have much choice. My parents dragged me here out there. But I grew up in Africa, so I love the warmth and whatnot. I was born in Scotland, and the first thing that happened to me here was I ended up with blisters because my mum took me down the pool, and I looked like Snow White or something because I came from Scotland. Or you know, we don't have tans in Scotland. Yeah, I got burnt to shreds because my mum never understood the weather. You know. No. Friend of mine just moved back, loves it. He's so happy there. Although some people say there's some issues in that, but a mate of mine just moved back and he's very happy. But that said, he doesn't stop talking about, you know, all the stuff we have here. But yeah. I don't think I could handle those temperatures that you guys take, those -degree temperatures. I mean, it's crazy. When I lived up north, further north, my minimum temperature that I ever got was -3. And since I moved down south here to Cape Town, the minimum temperature I get is 3, maybe 4 degrees Celsius. Nothing. So I don't know what it's like to be in -20 anymore. I would have no idea. But I do like it a bit cooler, I must say. Sometimes it gets a bit hot. But in general, in Cape Town, we have really good temperatures. It sort of stays at 24 all year long. If you take an average, I think our average is about 24. It's great stuff. We have the odd hot day at 32. Whereas further north, we'd have those 40, 42-degree days. Hectic stuff, man. So Kevin is now called himself the kicker. It's good to see you back, Kevin. Haven't seen you for a while. Did they kick you off YouTube or what? But you've got a nice new name now. But anyway, good to see you again, Kev. Wonderful stuff. As a kid, I love snow, but as an adult, I hate it. I need to drive slow and shit. I wouldn't know how to drive in the snow, and I'm a good driver. I wouldn't know how to drive in the snow. That would kill me. Wake up earlier and clean the snow as well. Yeah, I've seen that. You got your old spade out. No, not for me. I've never had to do that either. No, I guess the snow's not for me. The Asian markets, just be careful there, Fani. What I would say, particularly, for example, the Chinese market and stuff like that, those guys are insane when it comes to pushing money around, and they're hectic. You can never really tell. You know, the difficulty with the Asian markets, I think you'll be okay if you live in Australia and New Zealand because you'll be more in their time zone. But if you live in Europe or if you live in Africa or something like that, it's going to be difficult for you because their time is way out in comparison. And also the information available there is not as solid. So, for example, you know what's happening in America, you know what Trump is doing, you know what's going on in Germany and so on. But in China, you never really know what's going on. You know, they tell you one thing and it could be the other thing. So I find those markets, and particularly those types of traders, they just seem to be insane when they trade, and the markets just fly around all over the place. It's a very difficult market to understand and to pick up. You can trade it the same way. Like I said before, you can trade orange peels if you trade with our strategy and you trade with the system. So trade anything you want. When it comes to Forex, I mean, we trade in the Asian markets. We trade with all the markets. It is what it is. But as far as the indexes go, I kind of steer clear. And as far as their shares go, I kind of steer clear. So, for example, if you ask me about investments, and you said to me, Rob, would you invest in the Asian markets? My simple answer would be no. But not because I hate the Asian markets or because I despise them or think they're rubbish or anything like that. No, it's just because there's no point to it for me. I understand the American market. I understand the European markets. I understand the South African market. So these are markets that I can put my money in. I can buy companies and shares in those markets. I know what the growth prospects are or aren't in those companies. Whereas if you said to me, Rob, invest in the Chinese markets, I hardly know anything about those companies and what they do, what they don't do. I'd have to get more involved with them. So I'm just kind of like in the point of I don't want to waste my time and start playing around there and start dabbling in stuff that's just difficult to understand. And it's difficult to get information on it as well. So that's why I steer clear more than anything else. It's not nothing to do with them in particular or their business style or anything. It's not for me, and there's no point to it. Let me put it that way. There's just no point to it. I'll just stay with the general markets that I understand, that I've been in for a long time. And at this point in my career, life, whatever, why would I want to start afresh with another index? So I'm perfectly happy with the US index, the UK index, the German index, the South African index. That's good enough for me. And, you buy shares, keep them forever, and I know where they're going. I don't want to add those companies to it or those indexes to it. Although that said, I mean, if you understand the Asian markets, like for example, the Chinese car market is growing at an exponential rate. It's going insanely well. And then they have these things like Temu, and they have Tencent, and they have a couple of other Alibaba and all these ones that have really done well. I mean, they're growing still. I mean, these are fantastic investments. These are places to look at for investing. But what about all the other shares and stuff there? Do you understand them as well? So you're not really just going to invest in Tencent or just invest in Temu or whatever the case. You're looking at the bigger picture here. I must say, though, the car companies, I see a lot of growth there. If you're looking at the Asian market there, if the Chinese market, car companies look good. Most of the other Asian markets, no, not at all. They're not there. They're here. They're neither here nor there. I wouldn't go for them. The NFP news will affect the markets, but as I always say to you guys, is it that important? It's got its area of importance, but what you've got to remember is these news events that come out on a regular basis every week that you hang your hat on, which I don't do anymore, you have to understand that most of the pricing is already baked into the price because the institutional guys have already worked out where that news is going. So you get non-farm payrolls, or you get payrolls, or you get this, or you get that. And that's every week. And every week, everybody's like, oh, it's this, it's that, that's going to change. And you get all baked into it. And the institutional traders already know what's going to happen, and they've baked their money into the price. So if it, and you get yourself tied up in a knot following that kind of news, because I used to do that. I used to think, well, if I get that kind of figure, then surely the market's going to go long. So then I would be prepared to go long if I get that kind of figure. And then I would go long, and then the market would go short. And I think, how did that happen? And that's because the institutional guys will be like, yes, you got that figure, but if you read into this report, you can see that what they're actually saying is they corrected from last week, and next week that's going to happen. And you as a retail trader are like, oh, why did I even bother? So what I do is I trade around the news, those short-term news events, because they always tend to settle back to where they were. They tend very seldom to go in one direction. So the market's affected by candle wicks, by spikes either way. So I try and watch out for the spikes. That's about it. But further than that, no, I don't trade the weekly news. I look at the bigger fundamentals, the things that are happening in the background. As I've told you guys before, keep your eyes open for what's going on in the world and what's really happening in the background and what kind of things are going to have an effect on the markets. A good example of this is, for example, this whole week, everyone was baking in that NVIDIA was going to have this horrible result and the markets were going to go down. And that price was basically baked into the indexes that, Nvidia is going to have this horrible result, and the prices were going down. So like I said to you guys on Tuesday, in all likelihood, if Nvidia does come out with a reasonably poor result, nothing much is going to happen because the price is already baked in for that. But if Nvidia comes out with a reasonably good result, it's going to turn the markets around, and that's what it's done. It came out with the opposite. You have to ask yourself one question. Why? Why did Nvidia come out with a good result when everybody was saying they're going to come out with a bad result? You can only surmise one thing, and that is they were pushing the narrative so that everybody would sell, down, knowing that Nvidia is going to come out with a good result. So they push the market down so they can get their money in at the lower levels, and then it comes back up. That's the only narrative that I can see here, because I had a feeling that that was what's going to happen. I knew it. I just knew it. I knew they were baking it in, pushing it down, and then boom, there it is. Suddenly the markets are going back up again. It's a form of insanity, but that's what they do. They always do that. So I don't follow these weekly news events anymore, because it's exactly what they do with these news events. They're going to push a narrative on non-farm payrolls. You'll be able to tell me what it is because I haven't been watching it. You'll be able to tell me what the news around it is or whatever, because I don't even bother myself with it, because I'll just get involved in it again, and I don't want to. But yeah, there'll be a narrative that says it's going to be this amount, and this is going to happen, and that's going to happen. And then the results will get released, and that will happen. Everything will be baked in for that. And if the opposite gets released, the opposite will happen. But whatever they've done, they've pushed the narrative to push it in a certain direction so they can swing it their way. These big institutions know how to make their money, believe me. So I stay away from weekly news. I concentrate on the bigger narrative, the bigger story. Yeah, funny. I've often said your stop loss and take profit levels are in danger when there's big news out. But normally your stop loss and take profit levels are in danger more when it's the Fed's talking, or they're saying things or pushing a narrative or whatever the case. Then they tend to spike things up and down, and that tends to knock you out of your trades, which can be quite irritating, especially when it's wide, when it's really, really bad. But if it's just non-farm payrolls, it shouldn't go that far. Yes, Nick, that's exactly it. Institutional traders use the reports to buy and sell because it gives them the needed liquidity. And that's exactly what they're doing. They're pushing a narrative because they're looking for that liquidity. You see, it's very difficult. You think it's easy to be an institutional trader because they got so much money. But it's actually more difficult. It's far more difficult, because you and I can just click a button and say, oh, I'll have 1,000 of those, boof, or I'll have 20 of those, boof, there you go. There's so much available for you and me because we're Mickey Mouse in comparison. Doesn't matter how rich you are. Those guys are dealing with huge, gargantuan sums of money, and they have to find that liquidity in the market. And it's difficult. It's really difficult to find that liquidity. That's why institutional traders don't have a set stop loss. They have a stop loss area. They have an area where they know, like, hey, listen, if the market gets to that area, we need to move out of this. But when it comes to, I'll have a stop loss there, like you and I can put a stop loss, gets to the stop loss, boom, your trade's gone, things over. Easy, isn't it? No problem. But not them. They can't do that, because when that trade gets to their stop loss level, they've got millions of shares to sell, millions of contracts, whatever. So they can't just get out of a trade. So for them, stop loss is not a thing. For them, it's like they're looking for liquidity to buy as much as possible. They're looking for liquidity to sell as much as possible whenever they need to sell. And that's how they work. They obviously have a stop area in their heads, but they won't put a stop loss in place because they just got too much money to trade. Simple, really. Yeah, but Nick, you know, Trump takes you out a lot of trades because Trump's got this tweeting thing, hasn't he? Oh, gosh. It's been a tough year with him, I must say. It has. Because, you know, as traders, we follow patterns, right? The whole idea is we follow patterns. And then along comes this dude who's got no pattern. And that just makes it difficult. You know, if you get a dude in charge that's got no pattern, it just becomes incredibly difficult to maneuver. And yeah, so I guess they're happy at the moment because I see loads of green developing on the indexes. So I'm guessing that everyone's happy with that result, except for Brent crude oil, of course. But it certainly does look like everyone's happy with whatever result they got on the NFP. But yeah, that's going to turn around shortly and settle, and it'll all just go back to normal. So don't get too excited. Could have gone the other way as well. Yeah, totally. That's what happens. Yeah, I stopped hanging my hat on the news so many years ago. Man, I spent week after week after week waiting for non-farm payrolls, CPI data, or inflation, so many things. And I would work it all out and calculate it and say, well, if it goes like this, it'll go like that, take the trade. And half the time it went against me, half the time it went for me. Might as well just stay with the charts. It's 50-50. You know, maybe I just wasn't good at reading the fundamentals. I don't know. No, what it actually is, they've got so much more information than you and I've got. Now, you'll see these figures will move up and down. Those figures are moving up and down because they got the initial information. And now they're busy going through the information and finding things and reasons for it to go the other way. And then they read through the information and they'll find reasons for it to go back up the other way again. And this is a constant with them. Constant. So, yeah. So the initial reaction is, oh, that's good. And then the secondary reaction is, oh, no, maybe not so good. And then the next reaction is, oh, it's good again. You know, it's always difficult to read it, always difficult to try and figure them out. And it's like, initially you get it right, and you think, ooh, I got it right, because you see all the green, and you think, oh, I actually called that right. And then it all goes against you, and you're like, oh, I got it wrong. See, look now, if I look at the figure on the DAX, how it's jumping around, how it's shot all the way up, and now it's shooting all the way down, all it's telling me is they've changed their minds again, and they're like thinking about it going back, or it's just resettling. But it's actually resettling rather quickly if it's resettling, so I wouldn't know. I think it's always rather interesting, news events. That's why I say always, when I look at fundamentals, I look at the bigger picture of fundamentals. I look at the main picture of fundamentals, not the little picture. The little picture is what happened today. I look at what's happening over a longer period of time. What's the big picture? What's happening with America's relations with the rest of the world and tariffs, and China's relations with Russia, and how's business going between the countries, and how's the dollar shaping up, and all that sort of stuff. It's really important to understand how the money is actually flowing and which way it's flowing, and if it's flowing in or flowing out. And there's a lot of things to take into consideration with these markets, other than just the non-farm payrolls or the jobs figures or whatever the case. It does indicate whether the country is doing well, whether it's doing bad, or, you know, it gives you some indication. But should it be moving markets at that kind of pace, week in, week out? No, probably not. It shouldn't be. There should be more to it than that. So, yeah. Okay, so the delayed jobs report showed the US economy added 119,000 jobs in September. While the unemployment rate, well, I didn't see that. Okay. That just disappeared. So I guess we better go and have a look at what the news says. So let's go and see if we can get the news up here. And then I'll just go and see what it says here on Yahoo Finance. For those of you guys who don't get the news or You know, you can get it from Bloomberg, you can get it from Yahoo, you can get it from CNBC. There's loads of we're breaking down the key numbers and takeaways from the report. They were estimating 51 and they got 119,000. That's actually pretty good. It's pretty good. So, you know, in my day, that would have been absolutely brilliant. That would have been a fantastic result. And I probably would have been quite happy with that, to say the least. So, yeah. So this is a video, so that's not going to work out for me. Let me try and pause that. We'll just go back to here. Okay. Don't really want to watch another video now, do we? But yeah, it looks like they had a positive result, so I guess that's fine. Guess that's what everyone wanted, so that's what everyone got. Okay. So those who were still short on the S&P and the indexes and the DAX and all that, and even Bitcoin seems to be following the indexes up at the moment, doing quite well with that. Seems to be quite into that. Next says, I'm currently evaluating a recently developed tick chart trading box that is 1-to-1 70% win rate. Made 2 long scalps on that report. The trouble with win rates and scalping is eventually they hurt you. They don't make you money. Always the issue. They just don't make you the money. Always the problem with these things. You know, you think they're going to make you the money and then they don't. But yeah. But on that note, guys, so there's your non-farm payrolls out. They've done their thing. The non-farm payrolls have come out and they've been pretty good, I suppose. So markets should probably go up in all likelihood. Yeah, just keep in mind, trading is risky. It's, you know, it's not the easiest thing in the world for everyone. So today we discussed buy signals at the beginning of the show. I did go over how to get into a trade, and my one takeaway from this video for you guys should be that when you're looking for a trading entry, just take the trade and then manage the trade with the strategy and the business plan that we have together, and then you'll be just fine. Although you can go back and look at what I said on how to enter a trade and what have you. I didn't talk about how to exit a trade this time. We'll talk about that on the next live show. We'll talk about how to exit a trade, but on this live show, we're only talking about how to enter a trade. Interesting stuff. But on that note, guys, I'm going to be off now. I'm going to hit the road, and I'll see you guys on the next live show on Tuesday at 1100 GMT +2. I want to thank you guys for joining me here today. It's been great fun. I want you guys to have a fun weekend as well. Go and enjoy your weekend to the best of your ability. And between now and the weekend, make lots of money. Make money on those trades. On Friday, I'm bringing out a lovely video, which you guys will enjoy. So with that, I want to thank you guys for being here. Cheers. Ciao. And